In this video, I'll be showing you the top 20 traded stocks and ETFs in the United States, Australia, and New Zealand in the month of April. I've included timestamps down below in the video description if you want to jump straight into your favorite region. Every month, Sharesight puts out a list of the most traded securities of their members. Sharesight has the most powerful portfolio tracking software on the market, with over 400,000 members around the world. They even link up directly with your broker. 200 of the biggest from the US, UK, Aussie, and even New Zealand. They have a special deal for my subscribers on their annual plans. If you're interested, please make sure to check out the link down below. First up, we have the most traded stocks and ETFs in the United States in April. Topping the list, we have, of course, Tesla, up 10% for the month. They had a fairly wild month, dipping to $142 a share before rebounding up to $194, where it sits now. There was a roller coaster of news. First, we had a major sales drop, delivering over 60,000 less cars than many expected. Second, we also had news of Tesla's plans to slash the prices of its cars. This is a warning sign, as it shows they aren't selling as well as they used to, and have to drop prices to meet the market. And third, Tesla have scaled back their plans to launch a low-cost car to compete with their Chinese rivals. Lower prices, lower sales, and a scale back of new models certainly scared the market. This would have been a factor in the amount of sales of Tesla stock. Late in the month, however, Elon Musk flew to China and announced a deal with Baidu that saw the stock pop over 30%. So Tesla, as always, is one to watch. Second up is Nvidia, which also saw its fair share of action in April, dropping nearly 3%. Mid-April saw a major sell-off in many tech stocks, with Nvidia not spared. It dropped from a high of $900 to a low of $762 in about a week, a drop of 15%. Their stock saw the heaviest selling off in April among Sharesight users. Much of the buying activity will be eyeing up Nvidia's earnings report, due to be released on May 22nd. They'll be one to watch over the coming month. In third place is Apple, which like Nvidia, rose and fell during the month, up slightly at 1.7%. With their results about to drop on May 2nd, investors are getting excited to see what the world's second largest company does. As the market is expecting lower growth on the horizon due to weaker iPhone sales, this too is one to watch. In fourth place is the Vanguard S&P 500 ETF, which fell just under 2% for the month. What you'll see with ETFs is generally less selling activity, as many investors buy and hold ETFs and wouldn't be expected to trade very often. In fifth place is Microsoft, the world's most valuable company. Its stock dropped just over 4% for the month. Much of this attributed to the tech sell-off in mid-April. It's a shame, as the stock comfortably exceeded analyst expectations with their first quarter results announcement in late April. Microsoft is continuing to double down on its AI capabilities, announcing a $1.5 billion deal with AI firm G42 based out of the UAE, and analyst reports of Microsoft leading the generative AI movement. Again, certainly one to watch. Sixth is Amazon, which saw its stock reach an all-time high before the tech sell-off, which saw it drop 8% in just a week. It ended the month pretty flat, just rising slightly. Having risen 26% already this year, investors are continuing to buy the stock. Seventh is Meta, as volatile as ever, dropping a bit over 10% for the month, but still up over 30% for the year so far. Their poor month came despite pretty decent earnings. They announced layoffs. The EU is probing into their sharing of disinformation and announcements of greater investment into AI. Meta investors aren't the same as Microsoft. While Microsoft picks up on news of further investment into AI, Meta drops. Meta's investors stick around for the enormously lucrative digital advertising revenue. We saw this when they were blowing billions on the metaverse, when the stock fell to a price 4 or 5 times lower in 2022 than where it stands today. In 8th place is AMD, which like Meta, also fell over 10% for the month. Even before the tech sell-off, they were already on a downwards path for the month. Competition in the space is heating up, with new AI chip announcements from rival Nvidia. April also saw investors reassess the valuation of AMD, as it appeared overvalued on forward earning multiples compared to the likes of Intel, Nvidia, and Broadcom. Ninth up is Google, which saw its stock rise rise over 10% in April. This was largely attributed to its first quarter earnings, which were announced on April 25th. YouTube came out a star, with revenues up 21% year over year. And in 10th place was Berkshire Hathaway, a contrarian stock here as it doesn't operate in the tech space. It saw itself down 4% for the month, with poor first quarter earnings on the back of poor performance in the insurance business. Warren Buffett also deployed further cash over the quarter into Occidental Petroleum and HP, while acquiring insurer Allegheny. Rounding out the top trades in the US were Taiwan Semiconductors, Realty Income Corp, the VTI ETF, Palantir, the iShares Bitcoin ETF, Class C Google stock, Rocket Lab, Coca-Cola, Schwab US Dividend Equity ETF, and Netflix. Interestingly, Netflix saw nearly as many sell trades as it saw buy. Now we're up to the top 20 traded stocks and ETFs in Australia. First up is the Vanguard Australian Shares Index ETF. Despite having fallen a bit over 3% in April, this ETF of course covers the 300 largest publicly traded company stocks in Australia, with $15 billion under management. Second up was another Vanguard ETF, this time the MSCI Index International Shares ETF, which also dropped about 3% for the month. While the first ETF tracked the 300 largest stocks in Australia, this one tracks 1,500 companies from 23 countries around the world. On their website, they even recommend combining this ETF with the first one as a good way to get global portfolio exposure. On the return side of things, it has nearly doubled over the past 5 years. Third up, we have another ETF, the iShares S&P 500 Fund, which fell 2.4% in April. Aside from the provider and fees, this is virtually identical to the fourth most traded security on the US market and tracking America's 500 largest companies. Fourth up is the NDQ Fund, which tracks the NASDAQ 100 index. It too fell over 2% in April. This ETF consists of the 100 largest non-financial companies on the NASDAQ, such as Meta, Google, Amazon, and Tesla, for example. Over the past 5 years, it has grown about 150%, so it has grown pretty well on the back of the tech boom. Fifth is the first company on the list, Woodside Energy, which fell over 7% in April. Woodside is Australia's largest independent oil and gas producer, and it stands as one of the highest dividend stocks on the Australian exchange. Falling oil and LNG prices were held to blame for a 12% drop in revenue for Woodside. Some investors this month are also up in arms over their planned use of offset credits to meet their emission goals. The sixth most traded security in Australia in April is the Better Shares Australia 200 ETF. This is like the first ETF we covered, but invests in the top 200 listed companies instead of 300. It was down 3.7% for the month. Seventh is another company, BHP Group, which is another dividend powerhouse in the mining sector. Down nearly 3% for the month, they announced mixed bag results in April. Coal struggled while copper and iron performed. They also announced the sale of a coal mine in Queensland for over $4 billion, which strengthens their cash position. BHP saw a lot of sale trades on the Sharesight platform, showing some investors are starting to shy away from the stock. Eighth is Telstra, which hit a 52-week low during the month on the back of high interest rates. Many investors use Telstra stock as a bond proxy, offering steady and dependable revenues that competes with the yield on bonds. When the yield on bonds are high, Telstra stock falls out of favour. With recent news of rate cuts off the cards for 2024, these investors have fled back to bonds. Over at Sharesight, their investors didn't show many signs of selling. Telstra shares ended up falling nearly 5% for the month. In other news, Telstra announced they're reviewing their health portfolio, and yet again, there was another data leak. Ninth up is the Vanguard Diversified High Growth Index ETF, which, like nearly everything on this list, fell about 3% in April. This fund is a diversified fund of funds seeking high growth opportunities. It holds over 16,000 securities from around the world and offers a bit of everything. And in 10th place is yet another ETF, the Vanguard US Total Market Fund, which fell 2.6% in April. While the S&P 500 fund invests in the 500 largest companies in the US, this fund doesn't discriminate and invests in a bit of everything. Small, mid, and large caps in the United States. Rounding out the top 20 trades in Australia is Woolworths, investment companies Soul Pattinson, ResMed, DroneShield, CSL, and South32. Over on the ETF side, we have Vanguard's High Yield Australian Shares and their All World ex-US ETF. Better Shares have their Diversified All Growth ETF, and iShares have their ASX 200 fund. Interestingly, DroneShield and South32 saw about equal buy and sell trades for the month. Drone Shield shot up on news of their capital raise and NATO deal, but later receded to a calm 12% gain for the month. Mining company South32 saw its price rise 20% for the month, seemingly on the back of high commodity prices. And finally, we get to New Zealand's most popular trades in April. Kiwis love their ETFs, with 12 of the top 20 trades being SmartShares ETFs. Further to that, there isn't a whole lot of selling going on when it comes to New Zealand securities. In first place, we have the SmartShares US 500 ETF. This is simply a shell for the Vanguard VU ETF, which was the fourth most traded security in the US. Again, it represents the 500 largest companies in the United States, and it fell by 1.6% in April. Up second is the SmartShares NZ Top 50 ETF. It fell 2.7% in April. This fund holds the 50 largest publicly traded companies on the New Zealand Stock Exchange. In the list, you'll see there are two similar NZ Top 50 funds. This one, FNZ, tracks the NZX50 portfolio index, which caps all holdings to 5% of the total fund or less. NZG, on the other hand, doesn't apply the same restriction, and some of those shares can be over 5% weighting on the index. The third most traded securities was a surprising one, the SmartShares Europe ETF. In April, it was basically flat. This surprised me, as I didn't expect New Zealand investors to put so much money into the European stocks, even above Australian or local dividend ETFs. This fund invests in the Vanguard FTSE Europe ETF, which invests exclusively in Europe. Here is a view of some of those stocks. In fourth place is the SmartShares Emerging Markets ETF, which rose 3.75% in April. This is one of the more exotic ETFs, as it searches for growth in emerging markets like China, India, Taiwan, Brazil, and Saudi Arabia, among a few others. Here is a view of some of the holdings. In fifth, we have the SmartShares Asia Pacific ETF, which is a bit closer to home. In April, it dropped a decent 3.5%. This fund invests in Vanguard's FTSE Pacific ETF, which seeks investments in the Asia Pacific region. Main countries include Japan, Australia, Korea, Hong Kong, Singapore, and New Zealand. Here is a few of the companies they invest in. In sixth, we have the SmartShares Australian Top 20 ETF, which fell 2.5% in April. This fund invests in the 20 largest companies listed on the ASX, the Australian Securities Exchange. Here are some of the companies you can expect to be in this ETF. In seventh, we have our first company, which suggests Kiwi investors don't really pick individual stocks as often as we see in the United States. That company, of course, is the dividend powerhouse, Spark New Zealand. In April, their stock price was rather flat. On the news front, in April they announced a $15 million infrastructure investment in the Waikato to improve their cloud services in the region. They'll also be taking over the University of Waikato's data center. In eighth, we have the SmartShares US Large Growth ETF. In April, the price of this ETF dropped just under 3%. This fund invests in the Vanguard Growth ETF, which is comprised of high-growth stocks on the American exchanges like Microsoft, Apple, and Nvidia. In ninth, we have Air New Zealand, which in April dropped a whopping 9%. Revised earning guidance to the downside was their main culprit, taking their share price to a 2-year low. Considering the fact that air traffic is back to pre-COVID levels, this is troubling. Air New Zealand cites the increasing cost of living led to softer revenue from domestic routes, engine maintenance problems, while on North American routes it's facing more competition. On a slightly more positive news, flights to Hobart and Seoul were announced to be resuming from October. And finally, in 10th place, we have Infratil, a major infrastructure owner here in New Zealand. In April, their price was flat, increasing just 0.28%. Just as their pricing was flat, so too was their news, with no major updates, aside from putting some retirement community assets back on the market. Rounding out the list, we have Auckland International Airport, which just launched their new transport hub, Mercury Energy, Heartland Group, Genesis Energy, and Mainfreight. On the ETF side of things, we have the SmartShares Total World ETF, Dividend ETF, Automation and Robotics ETF, ASX 200 ETF, and the NZX50 fund we covered earlier. So that rounds out today's video. If you enjoyed it, please let me know down below in the comments. If this video format does well, I'll make it a monthly thing. If you like the look of the Sharesight platform in this video, please make sure to visit their website using the link down below and in the video description. They're offering 4 months free on their annual plans, so make sure you check them out. If you haven't already, please make sure to subscribe down below. It takes a lot of time to put these videos together, and it really helps the channel grow by simply subscribing. I really appreciate it. Thanks for watching, and I look forward to catching you on the next one. Cheers.